Well, holy smokes everyone, Papa Pow has just dropped a bombshell. In today's video, I'm going to be going over the Federal Reserve Jerome Powell's latest challenge at the Fed on how exactly they're going to bring inflation under control by lifting interest rates without going into recession. And newsflash, Jerome Powell's come out and said they may have to enter into recession to bring inflation under control. So everyone, why is this the case and what other indicators are pointing that we could possibly be facing a recession? Let's have a look.
What are the big threats to our getting there? Well, I would say right very near the top of the list is the threat of price stability. If inflation does become too persistent, if these high levels of inflation get entrenched in our economy and in people's thinking, then inevitably that will lead to much tighter monetary policy from us, and it could lead to a recession, and that will be bad for workers.
Well, holy smokes everyone, he finally admitted it, that if inflation gets out of control and they have to lift interest rates much higher than they expected, America is going to enter recession. But you know what's crazy is inflation is at a 40-year high, but what are interest rates at? 0%. So if we got inflation at 40-year highs, what were interest rates at 40 years ago in the 80s? That's right, they were roughly 10 to 15%. So the Federal Reserve wants to get serious about fighting inflation. They're going to have to lift interest rates much more than 3 times that they're saying they're going to do this year. And this has led comments from JP Morgan CEO Jamie Dimon to say they should be lifting interest rates really 6 to 7 times this year. The difference between now and 2008 and 2018, when they last tried to taper their balance sheet and lift interest rates, is they didn't have high inflation to fight back then. So when things look bad, they could reverse course. But now with inflation so high, they may not have that luxury this time. But there's also another risk and another big pickle they're in, the US government debt. And let's listen to what Jerome Powell has to say about the debt.
Right, so there's been a lot of demand.
But they would have predicted that the debt was going to go up.
They would have looked at that picture and said, well, you must be experiencing difficulty borrowing, but we're not at all. So no, we're on an unsustainable path. Debt is not at an unsustainable level, but the path is unsustainable, meaning it's growing faster than the economy, meaningfully faster than the economy. We have to address that over time. We will address it over time. And the better way to do it is soon and to do it in good times. Start when the economy is strong and the taxes are rolling in. And that's since we don't do fiscal policy, but I will say that the sustainability of the debt is something we need to get back to and focus on again.
As you could see there, he was pretty nervous, and he admitted the debt is on an unsustainable path and they're going to have to address it sooner or later. It's at nearly $30 trillion, people. At what point do people say enough is enough? There is no way they can afford to repay the debt, and what this means is they're going to find more and more ways to tax you, like what we're seeing with the new IRS laws, where they're even going to start taxing transactions above $600 for people selling things at garage sales or side hustles like eBay. And what this simply also means is the government's not going to be able to spend like they've been doing over the past decade. So when this next recession comes, they're not going to have the same firepower to fight it. But what's also some new data that shows we do have some headwinds coming our way for the economy. Look at this everyone, US retail sales slide most in 10 months on inflation and also the pandemic worries. Retail sales dropped 1.9% in December, well worse than the projected decline of 0.1%. That is an absolutely massive miss everyone. Retail sales dropped 1.9% in December when spending is meant to be good during the holiday season. And the decrease was broad, with 10 of the 13 major categories weakening. And what do we also see with the latest unemployment data? US initial jobless claims rose to the highest levels since mid-November to 230,000. And again, look at the debt, nearly $30 trillion. But you know what also really grinds my gears? They're also saying that the economy is strong, the job market is strong, they still got very accommodating monetary policy.
Right now, our policy is very highly accommodative, so we're stimulating. We're not restraining demand at all at this point. We're encouraging it. We're trying to get to a place where we're more neutral and then perhaps tight if that's appropriate.
They're still printing money like it's 2008, everyone. What are they waiting for? They're admitting inflation is out of control. It's at 7%. This is crazy. But they're still waiting. They haven't done anything. They're still printing money right now. What they should have done in the December meeting, when they knew inflation wasn't going to go away, they should have stopped all asset purchases and done a rate hike immediately. But I'll tell you why they didn't, because secretly, behind closed doors, the Federal Reserve and the government loves this inflation because it's devaluing the debt and it's also pumping up Jerome Powell's $20 million portfolio at BlackRock and all the other Fed officials that are insider trading on this action as well. But you know what, everyone? With GDP at 2.3% annualized, in real terms, we're already in a recession because when you factor in inflation, it is higher than the GDP growth, so we're actually going backwards. And we saw this with US wage earners. Wages only went up 4.6% when inflation is 7%, so people are actually getting big pay cuts. So everyone, the Federal Reserve is definitely in a pickle here, and how do you think they can get out of this one? Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching, I'll see you in the next video.